The investment world is absolutely electrified right now, and it's all thanks to a video that just dropped on May 10th from the traveling trader. The title alone tells you everything. Your missed AI stocks. This is even bigger. His entire thesis, his foot on the gas. He's telling everyone to go all in on AI, acknowledging it might be a bubble, but arguing this is precisely when fortunes are made. He sees this as the biggest wealth creation opportunity since the late 90s, and frankly, when you look at the numbers, it's hard to argue with that level of optimism.
Hold on, Jingguo. Optimism is one thing, but this sounds more like organized hysteria. The foot on the gas analogy is perfect because it completely ignores the fact that the road might end at a cliff. While channels like the traveling trader are screaming to accelerate, others are warning this is a sophisticated trap, a silent harvesting, where retail investors are unknowingly funding the trillion-dollar habits of tech giants. So the real question isn't how fast we should go, but whether we're driving toward a gold mine or an abyss.
An abyss? Mia, this is the furthest thing from an abyss. We are talking about a foundational, industrial-scale revolution backed by cold, hard cash. Look at the core evidence. The Magnificent Seven are projected to pour a staggering $700 billion into AI capital expenditures in 2026 alone. That's not speculative hype. That's $750 billion being spent on physical infrastructure, data centers, AI servers, power generation. This isn't the dot-com bubble built on clicks and dreams. These are real, profitable companies making massive, tangible investments.
But spending $700 billion doesn't automatically guarantee a return. It could just as easily be a desperate, panicked arms race where everyone loses their shirts building cathedrals in the desert. A huge expenditure is also a huge cost. It doesn't prove value, it just proves a massive bet is being made.
It's a bet backed by experts who are on the ground. Analyst Dan Ives at Wedbush calls this a once-in-a-century technology revolution, not a bubble. He's pointing to rapidly improving enterprise adoption and strong revenue growth. These aren't the profitless startups of 1999. We're seeing real companies generating real revenue. That $700 billion isn't just a bet. It's a vote of no confidence in the old way of doing things. It signals a structural shift, so large that the biggest risk isn't being in the market, it's being left out.
I think you're looking at the wrong side of the ledger. You see a $700 billion investment. I see a $700 billion cost burden that is absolutely cannibalizing the financial health of these very same tech giants. We have to look at the plumbing of this deal. Let's talk about free cash flow. Amazon, one of the leaders of this charge, saw its free cash flow decline by a staggering 95% on a trailing 12-month basis, down to just $1.2 billion. That's not a sign of strength. It's a sign of a massive, unsustainable financial hemorrhage.
You're focusing on a short-term cash flow metric while ignoring the long-term strategic necessity. Yes, Amazon is spending, but what are they spending on? They are securing the picks and shovels for the next digital gold rush, the power, the chips, the infrastructure that will define the next 2 decades of technology. It's a strategic reinvestment into a technology that is fundamentally transforming every industry on the planet.
But is the demand for that technology even real? Or is it being manufactured? This is where it gets truly concerning. Goldman Sachs has raised alarms about what they call circular revenue. Look at the NVIDIA and OpenAI ecosystem. NVIDIA provides equity financing to customers like OpenAI, and that money flows right back to NVIDIA in the form of GPU sales. It's an accounting mirage. OpenAI has a potential funding gap of $75 billion for 2026 alone. You're calling this a revolution. I'm calling it a Ponzi scheme with better branding, propped up by financial engineering to create the illusion of demand.
That's an incredibly cynical take on what is clearly a synergistic partnership to accelerate innovation. Of course, early-stage, capital-intensive technologies require creative financing, but the underlying demand from every other sector, from healthcare to finance to manufacturing, is undeniably real. You're getting lost in the quarterly accounting of 2026 and missing the 20-year horizon.
But investors live in the here and now, Jingwo. And right now, the companies you're celebrating are seeing their cash reserves evaporate. The money isn't just disappearing, though. It's being transferred. The real winners aren't the Mag 7, they are the suppliers of the picks and shovels. While Amazon's cash flow craters, the suppliers of high bandwidth memory are reporting record gross margins of 60 to 70%. This is the silent harvesting in action. Retail investors buy the AI story of the big tech giants, but their capital is just being funneled through to subsidize the skyrocketing costs of the underlying infrastructure providers.
Okay, I have to admit, Mia, the 95% drop in Amazon's cash flow is a sobering statistic. It does suggest that a blind foot on the gas strategy applied to the giants themselves might be misguided. You're right that the costs are enormous, and the immediate financial strain is real. It's not as simple as just buying the biggest names.
And I'll concede that the $700 billion spend is very real. It's not a complete illusion. It's creating an absolute gold rush for the companies, solving those structural bottlenecks, the power companies, the memory manufacturers, the data center operators. The mirage isn't the technology itself. The mirage is the idea that every company in the AI space, especially the big ones bearing the costs, is going to win.
So we're really talking about a fundamental rotation. The true opportunity isn't in buying the AI story from the headlines, but in investing in the AI plumbing that's hidden from view. The money is flowing toward the companies solving the core bottlenecks in power and memory. That's where the value is actually concentrating.
Exactly. The 2026 AI market isn't a simple choice between a miracle and a scam. It's a forced industrial migration. The silent harvesting is real for anyone blindly holding the over-leveraged tech giants. But the foot on the gas strategy could actually work if your foot is aimed squarely at the infrastructure providers who are charging a fortune to build the road, not the ones driving on it.